Good afternoon.
A little closer, John.
A little closer.
Jonathan, there you go.
All right. How's that? It's better? Okay. Good afternoon. I'm Jonathan Nicholas. Can we go to the next slide, please? I'm the diocesan treasurer. I'm the diocesan treasurer. Can you hear me in the back? I got to shout it out. All right. We don't usually get that enthusiastic about finance, but I will aspire. All right, so I'm the treasurer. An important thing about that is that you might not have noticed, but this morning you actually re-elected me to this office. So that means that, in fact, I work for you. I'm not one of the staff, and I'm not appointed by the council or, dare I say it, even the bishop. And that is an important part of the independent lay participation in the governance of our financial resources. And I do that not by myself, but essentially by coordinating the group, by coordinating the work of lots of different committees. There's the Finance Committee that really focuses on matters of the budget and also issues arising in individual parishes. For example, if your parish is having some financial problems and you need some help with that, you can start with the Finance Committee. Or if you're thinking of encumbering your parish with a lease or a loan or something like that, you also start with the Finance Committee. And you'll be hearing from the chair of that committee, Joe Alcock, later, who will walk you through next year's budget. I'm going to talk to you about essentially what's happened in 2025. The Investment Committee is led by Nicholas Heffenreffer. This is a group of highly experienced people who are familiar with the management of portfolios. They don't actually manage the portfolio themselves, but rather they perform an oversight role with the professional managers who look after the SOPR Fund, the Diocesan Investment Fund, and also the trustees of the Seton Belt Trust. The Audit Committee is a group of audit professionals led by Patrick Summers. He is an experienced church auditor, and some of you have probably worked with him on your own church audits, which is, of course, my way of reminding you that you should be doing church audits. And then, of course, the Diocesan Council, which actually exercises your executive authority over the course of the year. Of course, the people doing the real work are the bishop and our staff, and as treasurer, I just sort of tag along and make sure that people are listening to what is coming up in other committees and groups. Okay, next slide. We always start with a report on our audit, and we're always a year behind because we haven't actually closed 2025 yet, let alone audited it. But we have concluded the 2024 audit, and we received an unqualified opinion, which is the kind you want to get, which basically means that there were no problems with our books in our 2024 records. So let's take a quick look at the top level of the operating budget. Last year, we budgeted $4.7 million, and we actually at $4.73 million, and we actually came in at about 4.78. So a positive variance in revenue of about $44,000. Our expenses were slightly higher than budgeted, but in no real material way. And so we ended the year with a $37,000 surplus. Now, last year, if you were here last year, you'll recall that it balanced to the penny. And I kind of made fun of Andrew Walter because of that. And so we've presented things a little differently this year, and you'll see why in just a moment. So this is a look at our revenue. And as you can see, congregational giving is the single largest and most important piece. It accounts for about just under 50% of the total revenue. The next group down, if it's big enough for you folks to see in the back, there are some asterisks up there next to the SOPR Fund, the Court and Education Fund, and the closed parish fund draw. The things that those all have in common is that those are diocesan assets, diocesan pools from which we draw operating funds. And the way we run the budget is when we take money from those diocesan pools, we put them in the budget and show them as a source of revenue, so that everybody can, rather than have a separate budget for each fund, so that everybody can see all the money that comes in and all the money that's going out. The next category down, and that group of draws on funds is about 37% of what we spend. The next group down is grants, and the Lilly Endowment grant funding was important this year, along with the Water and Wilderness Church. We actually count that as a grant because they have their own little nonprofit that they help reimburse the costs of that mission. And then we received a grant from the National Church to support our Bowie church plant. And that's 3.5%, but it's important. We have earned income as well, two categories up there. One is the interest and dividend income. This is basically the return that we're getting on our unrestricted funds, cash and unrestricted funds, as well as the other income line. And the big piece there is that the Protestant Episcopal Church Foundation, which is essentially the Cathedral Close, makes a reimbursement to the diocese for all the time and effort that Bishop Marianne puts in assisting run their organization. You see, you might not realize this, but she has more than one job. Okay. And then the final element is the bishop's annual appeal. And you can see there that that we exceeded our target on that. Now, one thing that you might notice is the closed parish fund draw. So the closed parish fund is a group of funds. The money arose from the sale of property and buildings associated with parishes that no longer operate. And the diocese, the council, has had a long-standing policy of setting that money aside to support new parish plants. And so we had budgeted $127,000 that we would take from that fund and use it. But we didn't actually need it. We exceeded our target on congregational giving, we exceeded our target on the bishop's annual appeal, and we exceeded our target on the interest and dividend income. So we didn't actually make that draw, so the money is there to be used this year and next year beyond that. And that is actually why we have a surplus this year. Because in the past, what Andrew would do, and it's fine, I'm not teasing him about it a bit, but it's fine, is essentially to draw from one of those funds just enough money to bring the budget into balance. So that's the last year why it perfectly matched, but this year, since we didn't make a draw from that fund, it doesn't perfectly match. All right. Let's move on to expenses. You can see here that we've broken it out into a number of different categories. Salaries and benefits includes all the salaries and all the benefits for all the diocesan staff. We haven't allocated those salaries and benefits out into some of these other functional areas because we wanted you to be able to see exactly how much we spend on salaries and benefits. So the other functional areas include only sort of programmatic expenses, not staff expenses. The next area down is church revitalization. That is the funds that support church plants, the tending our soil expenses, the planting seeds of renewal initiative, also supports advice from strategic advisors who help keep us on track with the strategic plan. Faith and leadership includes expenses associated with the School for Christian Faith and Leadership, clergy development and discernment, as well as our campus ministry initiatives. Equity and justice is the money that's associated with the operating of the expenses associated with the Equity and Justice Minister, not her salary, but the things that she does, as well as the expenses associated with running and supporting the reparations initiative. Again, not the reparations themselves, but just the retreats, the meals, that sort of thing. National church and international ministries, these are the funds that we tithe up to the national church and beyond. General administration is essentially the costs of running the diocese, IT expenses, our accounting costs, our audit costs, parking, all of that stuff. And then finally, governance is mostly today. So it's not cheap. I hope you enjoyed that sandwich. Okay. Next slide. Next slide. Next slide. There we go. All right. Which brings us back to the budget. And that's why we have a $37,000 positive variance. It's, essentially for an organization with a budget of nearly $5 million, that's rounding error. So we're basically on target. Okay, now we also show non-operating revenues on the next slide. All right. So non-operating revenues is essentially returns that come from our unrestricted portion of our asset pool. So because those funds can be spent down to zero at any time, we have total control over them. So changes in value associated with those are reported as non-operating income. Now, we have both realized and unrealized gains. Realized is we had something, and in this case, sold it for more than $100,000 more than we bought it. So we show that as a realized gain. The unrealized gains are things that we have on our books. We haven't sold them, but if you call up the stock price, it's worth more today than it was a year ago, so we record that. Usually the unrealized, the first line, is often a negative number because it's the stuff that we sell that's not performing. But we do, our professional managers they're not, churning our asset base, but they do adjust it because we have certain parameters that we want them to stay within. And if, say, the technology sector, which has been doing very well, gets sort of too big a piece of our pie, they will sell part of it and redistribute it into other areas so that we're not exposed to extreme risks associated with any particular industry or anything like that. And just a general note on our investment pool, we, in accordance with our, we have a very detailed investment policy, which is monitored by the investment committee. And in order to comply with your wishes that we not be engaged in certain areas and have stocks in certain firms that are engaged in certain things, we invest almost exclusively in baskets of, what are they called?
SRIs?
No. Index funds. There we go. Index funds that are basically made up of the entire market. Okay, sorry about that. All right, so that is our a report on the sort of the year's profit and loss statement, operating statement, which covers January through December. Let's take a look now at our balance sheet, which is a moment in time. And if you look closely, you can see the moments in time don't actually line up. But that's because we're still closing the books, and this report is really for your information and indicative purposes The real details are in the audit report and the annual statements. Okay, so assets. You can see that our asset pool has grown considerably. The markets have been doing well. That's basically what that is about. Total liabilities have increased by $6 million. Don't be alarmed. We haven't gone out and borrowed $5 million. This liability line is essentially the value of individual parish investments that are included in the diocesan investment fund. Since they're under our roof, we show them on our balance sheet, but we also show them as a liability money that we owe back to you. So that increase there is almost entirely due to the change in value of parish assets in the diocesan investment fund. So the net total assets is really what the diocese is or has. And you can see that that's gone up by some 6%. And that's after all the draws that we've made. All right, so let's look at what sits on that in those assets in the next slide. And we've broken it out in more detail here, and there are, both vertically and horizontally. There are two columns here. The first is essentially the diocese. The second is assets associated with the Bishop Walker School. The Bishop Walker School is not like St. Albans, an independent entity, legal entity. It is, in fact, a ministry of the diocese. And so all of their assets are all of our assets, but we segregate them here so that you can see what's going on there. And of course, we are very clear that monies that flow to the Bishop Walker School are for its operations and are all reported separately. Cash, we've got a very healthy cash position. We're always in conversation with the investment committee and our accountants about whether we have enough cash or too much cash. But for an organization like ours, we never quite know when someone's going to need some cash. It's good to have it on hand. And the last few years, with interest rates the way they are, cash is a good investment. As you saw, how we've consistently exceeded our interest and dividend income targets. Certificates of deposits, these are short-term investments. Our investments at fair value, now we're getting into sort of the larger numbers, 19 million, the SOPR fund. The SOPR fund is a restricted fund that's an endowment that we can only make a certain draw on, and that is a considerable that's a considerable base of our assets. And here's the line that I was telling you about a moment ago, the funds invested by parishes. So there's an equal liability on the next page. The next line is essentially the cumulative net impact of the Bishop Walker School on the diocesan balance sheet. It's not really a liability or an amount of money that we expect the Bishop Walker School to pay back to us, but it is the cumulative effect of their operations. And over time, they have essentially, we've spent $1 million more on that effort than it has brought in. Now, if you were here last year, you'll remember that number was bigger. It was $2 million. So as the Bishop Walker School raises money, and is currently in the middle of a capital campaign, and I'm sure they'd love to hear from any of you, those assets balance off that previous deficit. Again, I want to make it clear, we're not taking any of that money out of the Bishop Walker School. It's just that the net impact of that activity is decreasing, or the net loss associated with that activity.
Hey, Jonathan, I need you to move things along, okay?
All right.
Highlights.
Highlights. This is all it's all highlights.
Jonathan will be at the resource table for any questions that you might have.
Okay.
No,
right.
seriously, man, we need to wrap
Moving
this
along.
up.
All right. The next big line, we'll skip down to the big numbers. $28 million. This is the beneficial interest in the Seton Belt Trust. That is not our money. Rather, that is an independent trust in from which we are one of the primary beneficiaries, and under accounting rules, we show that as an asset on our books. Looking at the next page, liabilities. The really only liability here is the money that we owe you. And the net assets, the key figure here is that of our 100 million in net assets, 86 or 87% has some kind of restriction against it. And 15 million is really the independent figure. All right. Next slide. This is essentially the similar slide, similar fact. It shows that we've got restrictions on some of the assets. Next slide. Move on. Here we go. This is so we won't go through these individually. I hear you. But these funds are restricted. You know, I've said before that we have 2 levels of restriction, or actually 3. These funds are restricted as to endowment and use. That means we can't spend down the capital, and the money that we take out has to be spent for a particular purpose. So there's a double restriction. We have to preserve the capital and spend the money that comes out of it in a particular way. Next slide. These are funds that have a donor restriction, so they have to be used a particular way, but we could, theoretically, spend it down to 0 if we need to or wanted to, though we generally don't want to. And then the next slide. These are funds that have been designated. So essentially, there are uses here that the council has said. I mentioned earlier the closed parish fund. That is a council designation. And what the council does, the council can undo. But for now, these funds have particular purposes that it is our policy to follow. Okay, almost there. Next slide. The SOPR fund. We always talk about the SOPR fund. This is our fund that provides 37% of our operating income. Its current value is $47 million, and that is an increase of $6 million. That is after the $1.5 million draw, or 1.6, whatever it was, that we made this year. So it's doing well. This is the fund that we have been gradually reducing the annual draw. It was 5% several years ago. This year it will be 4.4. And the reason we're doing that is so that the funds will stay there and continue to grow. And as we've been doing that, in fact, we've still been able to increase the actual dollar amount, mostly because of the values in the markets, but also because more money is there, earning more money for us. Now, last year, some of you came up to me at lunch and said, oh, well, you know, 4.4, 4.5 sounds low. My financial advisor says I can take 5. Well, the fundamental difference is that your financial advisor is looking at, for you, for your retirement funds, an investment window of, say, 30 years. Our investment horizon is the return of Christ in glory. And
next year.
And at least as we experience it, he seems to be taking his time. So we need to make sure that we can last. The final element, and I am almost done, is the Seton Belt Trust. This is the trust that I've mentioned every year. It is not under our control. It is under the control of the trustee, and they are directed to give a certain percentage of their value to us every year, and the use of that is designated as well. All of these funds, the annual draw of 1.4 million is, under the terms of the trust, used to support people, clergy who are canonically retired in the Diocese of Washington. All right, final slide. Parochial reports are March 1st. Audits, remember to do your audits. If you don't have an auditor, let me know, or let Tom know. We can put you in touch with one. All right, thank you very much.
Thank you, Jonathan.